Nur Syazwani binti Zabri, and I will start with the introduction. Accounting fraud has been struck since early 2000 when big companies such as Enron and WorldCom have been caught in cook the books. Cook the books have been used to describe the unethical activities performed by the companies to falsify their financial statement. The cook the book mostly be used to record all the non-existent transactions in order to exaggerate their financial statements to make it look as a company in a better financial position than they actually are. By means, it's either they overstated or understated in their financial statement. As for example, by overstated the financial statements, it's either they recorded the revenue twice from their actual. Sometimes they cook the book to avoid from paying sum of tax to the government. So the company will be understated their revenues and understated their expenses. Loss means that they will only need to pay little amount of money for the tax. However, cooking the books only deliver the short-term results. This is because most of the company who had been cooked their books have been caught in act. When their unethical activities has been exposed, they will be charged to fraud. In the worst scenario, they will be fined and be put in jail for many years. As for the long-term results, it will affect the company, the workers, the investors, shareholders, and as for the for an example, the big company that have been caught recently is American Insurance Group. In 2001, the US Securities and Exchange Commission (SEC) have caught AIG helping their client, adding numerous non-existent transactions in its balance sheet. Then, the investigation had been done to trace others illegal and non-existent transactions between AIG and their clients.
I will talk about the perpetrated and concealed of AIG during the year 2000 until the year they started in year 2000 and the Security Exchange Commission recognized that AIG have made fraud of their financial statement with fake insurance transaction. AIG make fraud of their financial statement because they want to strengthen their balance sheet. SEC and Justice Department settled with AIG for a 10 million civil penalty for the continuing investigation in 2003. And 5. That AIG was found guilty in committing stock price manipulation, breaching along with a massive accounting fraud. The CEO of AIG making a decision to use the traders for buying their stock. The competitors have been paid by the AIG to increase their bid regime, so that the other customer thought that their business will in March of 2005, the company was exposed. The deal with General must have been accounted as a deposit. In the mid of 2005, they have confessing what they have done in improper accounting. The company has been involved in misleading accounting and financial reporting. The fraud that was concealed in this company is AIG was create suspicious transaction of their balance sheet in the past. Besides AIG making faulty paperwork for General by agreement not further evaluated. This is because AIG was trying to protect themselves from getting caught. AIG actually cooked their books by entering into a fraudulent loss reserve transfer transaction. The person of the whistleblower in the American Insurance Group scandal is Gordon Massey. He is head of leverage finance group for this company. He realized that AIG was overstated its portfolio by 2 billion, which is they did not clearly write down its high yield bonds.
Hi, I'm Nur Shafiqah. I'm going to tell you about fraud triangle. The first point is pressure. Pressure is the Pressure happens when the management or the other employee have incentive or pressure to commit the fraud. For the example, when an employee has a financial problem or debt. As for the business, the pressure that they have are when the business getting more loss than profit or the economic crisis on that year. In AIG case, the CEO have manipulated the price talk. Greensburg has increased their price talk because of the falling of the product that calling CDO. The pressure for management are they need to do the fraud because of the wrong decision that the CEO make. They need to manipulate the assets so that the revenue will rise and can pay back the bailout. To solve this solution, the company need to identify what is the pressure that can be impact to the business or the worker to do the criminal behavior. If the company know what gives them the pressure to commit crime, they can be prevent by overcome the pressure with the good way. The second of the triangle is the opportunity. Opportunity came when the company in the complete control and it create an opportunity to do the fraud. Opportunity to do the fraud are more commonly present in the organisation that have a poor internal control because it can make more easier for the employee to do the fraud. On the AIG case here, CEO of AIG, Greenberg, he see the opportunity to do the fraud when she inflate the stock price. Based on the AIG case, CEO and the accounting department show the dishonest act because of the pressure that caused them to commit the dishonest act. To minimize the opportunity to do fraud, is the audit committee need to pay more attention on the financial reporting as also the board director. The last stage of the triangle is rationalization. Rationalization is an attitude, character or a set of ethic value exists in that allow management or employee to intentionally commit a dishonest act, or they are in the crime system that impose sufficient pressure that cause them to rationalize to the dishonest act. Based on the AIG case, CEO and the accounting department show the dishonest act because of the pressure that caused them to commit the dishonest act. For example, when the general purchase reinsurance from AIG to cover some of the general insurance contract, then some accounting individual have helped the AIG to create the false accounting entry. This has shown that AIG executives have manipulated their own financial statement. It has bring to light the shady accounting of the reinsurance transaction.
I am Nur Azim binti Muhammad Razib. I will talk about the consequence, effect, penalty imposed for the auditors, the company, management, the shareholder, and any relevant party, which is government. The auditor of American Insurance Group AIG was PricewaterhouseCoopers, which known as PwC. PwC has been auditor of American Insurance Group AIG more than 2 decades until the scandal in 2005. However, PwC do not plead guilty and claim that they do not involved in the accounting scandals and the fraudulence of the financial statements because did not do anything wrong regarding the accounting standards. However, PwC received the consequence of the scandal. One of the biggest effect is lost public trust towards them and accounting industry, which is lead to new laws and regulations. PwC facing risk of lawsuit brought by shareholder and bondholder. They file legal proceeding depending on the filing head of the rule when making an investment towards the AIG. The disclaimer of AIG Audit Committee has got a 224 pages claim filed by Ohio lawyer. In the lawsuit, the accusation against AIG of security fraud and claim that PwC ignored the warning sign contained in the AIG report, which is red flags. This causes PwC to issue false and misleading audit reports. In 2002, PwC has paid $5 million to Securities and Exchange Commission (SEC) because violate auditing rules, which is violates independent standards. In addition, PwC also get criticism by several witnesses during investigation into AIG because it ignored warnings on American Insurance Group and not being independent auditor to the company. Next, accounting scandal of the AIG also give big consequence to the company itself. The company lost the interest of investor and shares toward the company. This is because they lost trust towards the company after the fraud of the financial statement that give bad impact towards them. Other than that, American Insurance Group also need to pay 1.6 billion fines of the American Insurance Group AIG itself and criminal charges for some executive. The company also lost over 45 million US dollar worth of market capitalization. They also fired the main player of the accounting scandal, which is their top management, CEO and CFO. CEO, which is Hank Ripper, and CFO, which is the Howard Smith. Other than that, AIG need to pay the 200,000. They also need to pay 1.5 billion to the distribute of three funds. These funds are for the victim of the fraud have been made by the company. Not only that, AIG also need to pay 25 million to the government of United States of America to serve the criminal liability from the accounting fraud. AIG also need to pay penalties 10 million to solve fraud charges involved. Plain field. Other than that, the company faced bad financial problems since a lot of things need to pay. The company also had a problem to rebuild and value the company as it was before. Third, the management of American Insurance Group AIG also affected by the accounting scandal. The employee of the American Insurance Group AIG were told to buy the shares to help sustain the company losses since the company cannot get difficulty to gain trust to buy the share from the company. Next, the vice president of the American Insurance Group, which is Christian Milton, was get penalty. He was charged penalty because of the mail fraud and security fraud. He sent 4 statements to the Security and Exchange Commission, which is causes penalty. Penalty that were imposed toward him is 4 years in prison, 2 years of supervised release, and $200,000 fines. Other than that, the CEO of American Insurance Group AIG, which is Hank Greenberg, the main player of the accounting scandal. Hank Greenberg was fired at 2005 after all the investigation met. He also need to pay 50 million to Security and Exchange Commission. The CFO of the AIG, which is Howard Smith, need to pay 1.5 million as penalty and been fired by the company because of the improper accounting. Greenberg, CEO of the AIG, and the CFO, which is Howard Smith, subject to legal suit for misleading state regulator and investor by manipulating AIG's decision to get better results in the company finance and the actual one. Hank Greenberg paid $50 million to solve the charges without admit or deny the acquisition that made by the SEC. The top management, which is Howard Smith, paid fined $750,000. He agreed that he will suspended for 5 years from emerging or practicing as an accountant at the AIG. Next, the accounting scandal also give consequence toward the shareholder. The shareholder are the one of the most will affect because the fraud that have been made. One of the consequence is they face a lot of losses. Other than that, they lost faith towards the AIG company. Shareholder also decide to take legal action towards the company. Despite of all that, shareholder receive 800 million from AIG as penalty from them. Last but not least, the other party that involved in the consequence of the AIG is the government. AIG one of the biggest insurance company in the world. So when the fraudulent happen, it will affect the government of the United States of America. AIG is one of the biggest insurance company in the world. The government had a lot to worry about because the people America had injured in this company. The government will have stopped the scandal from arising because the government has 80% control over the company.
this whole accounting fraud case have been going on for many years. Due to the unethical activities, AIG facing many consequences after they had been caught in accounting fraud. The bad structure of AIG's management had caused them to overlook their role in establishing good risk policy of the company. Aside from that, AIG also has a bad culture that had been implemented inside the company, which is focusing on a reward system. This culture placed little responsibility on the executive who made poor decisions. This fraud has also caused AIG wholly to get involved with the US Security and Justice Department. They had been investigated for a long time, and this had caused them to hold their business for quite some time. The US SEC had concluded that AIG was failed. The failure was possible because the top management of the company cooked the books by sweeping the regulations of over-the-counter derivatives, including the credit default swaps, which effectively removed federal and state regulation of these products. The US government also had involved in helping the company to keep operate their activities as they came out with the settlement, which is the bailout. Although the US government helped them with the bailout, AIG still lost massive amounts of money even after quite some time. As the company started to show positive signs in recovery, damage done by the people inside the company had caused people to have doubt either the company will even be recovered after what had happened. AIG had decided to sell off the assets that they have in order to pay all the debts. However, they had a difficult time in selling off their assets. This is because their potential buyers who are also affected with this are also trying to recover. AIG have moved forward by took the step to restore back their reputation that have been vanished. This start over the company under the scrutiny of the United States government by appointed the new CEO and also the board of directors who are more capable and can be trusted to bring changes to the new AIG. As for conclusion, AIG had been gone from being the top giant international insurance company to a company downsizing under the United States government control. AIG have a rough and tough road ahead of it, which is not only in restoring its massive damaged reputation, but also in repaying back the money to taxpayers. But this is the price that AIG need to pay because of the CEO wrongdoings. From this case, it can be concluded that the CEO failed in carrying out his duties. He been caught violating the laws by committing fraud. He not only committed the fraud for his own interest, but he also worked together with other people outside the company who had financial ties with AIG. American insurance company will not be the same as it used to be. Even after 10 years or 20 years, it will not be enough to put AIG to the place it used to be after all the massive damage that been done. AIG will always be remembered by the people as the fallen giant, even they used to be the top insurance company that people trusted with a lot of achievement that can be proud of.